Hello fellow Pi friends. Impico in. Glad to see you again. In recent days, Silicon Valley Bank exploded and declared bankruptcy. The stock price dropped from $350 a share to zero. And the assets of countless investors returned to zero overnight. The money stored in the bank can no longer be withdrawn, shocking the world. Whether it will trigger a financial tsunami remains to be seen. U.S. regulators on Friday, March 10 made an emergency seizure of assets from Silicon Valley Bank, the largest financial institution since Washington Mutual collapsed at the height of the financial crisis more than a decade ago. Bankruptcy events. Silicon Valley Bank is the 16th largest bank in the United States, and its depositors are mainly practitioners in the technology industry and venture capital-backed companies. The bank collapsed after depositors rushed to withdraw their funds due to concerns about the bank's balance sheet. It was the second largest bank failure in U.S. history, after Washington Mutual. Silicon Valley Bank SVB goes bankrupt, which will have major ramifications for its customers, investors, employees, and the wider financial system. Silicon Valley Bank's clients, including startups, venture capitalists, and technology companies, will be most affected. They will lose access to services from banks, including loans, investment management, and banking services. Investors in Silicon Valley Bank would also be affected if a bank fails. Its shares may become worthless, and its bondholders will not receive principal and interest payments. This can lead to significant losses for investors, including institutional investors such as pension funds. If Silicon Valley Bank goes bankrupt, its employees will be affected as well. They will lose their jobs, and many of them will have difficulty finding new jobs in the industry. Silicon Valley Bank is a key player in the banking industry, especially in the technology and startup industries. Its bankruptcy could have knock-on effects for other banks and financial institutions with which SVB has business ties. This could lead to a loss of confidence in the financial system, leading to a potential financial crisis. The Pi network is a decentralized cryptocurrency that operates independently of the traditional banking system. Therefore, the bank's failure should have no direct impact on the Pi network or its operations. However, if bank failures led to a broader economic crisis or recession, there could be an indirect impact on the Pi network. A severe recession could lead to a drop in demand for Pi coins, which could lead to a drop in the price of Pi coins and reduce network adoption. Additionally, if Pi network members store their funds in Silicon Valley Bank, they may not have access to funds to participate in the Pi network, which may limit growth and adoption overall. While bank failures should not have a direct impact on the Pi network, broader economic conditions must be monitored for any indirect impact on network growth and adoption. Thank you for watching. Please subscribe and like. Your support is the driving force for my updates.